Welcome back. I'm Pratap here. Today is the 15th November 2023. And from today onwards, I will be generating demand and supply zones not only for the daily time frame, but also I will generate for 75 minutes time frame and as well as 15 minutes time frame based on the request from some of our members. But for 75 minutes and 15 minutes, I will generate the stocks based on the bullish setup and bearish setup. I will also generate the bullish setup and bearish setup stocks even for daily demand zone, because those people who wants to trade only based on these setups, the filtered stocks will be useful to you. So before we generate these zones, let us quickly analyze the demand and supply zones, that is the high liquidity demand and supply zones generated in our previous report. Even before that, Nifty's daily supply zone, which is inside weekly supply zone, is pierced. This is what you should observe. And Bank Nifty, the daily demand zone, which is inside the weekly demand zone, is completely violated. This is also you should observe. Okay, now let's get into our high liquidity zones generated in our previous report. The first one is Tata Chemicals. So previously it was near the daily demand zone. Even today the prices did not enter into this demand zone. So we did not get the trade. But look into this analyzed report. We have a 75 minutes demand zone inside a daily high liquidity zone, which is already tested recently. Previously it was a fresh 75-minute zone and which was tested a week back. Now again prices are entering into this. Generally what we do, if the 75 minutes is already tested, we don't take that zone for our trading purpose, unless the 75 minutes is also a high liquidity zone. So that's why maybe taking an entry into this zone is a risky one, because we didn't find any fresh 75-minute zone inside this. So you have to remember. But the interesting thing is, we have identified a fresh 15 minutes zone. Look into this. This is a fresh, prices are yet to reach into this zone. Let me expand, let me zoom, yeah. So this is a fresh 15-minute zone. But what is our trade plan in general? We don't take trades directly on these fresh 15-minute zones. The 15-minute zone should be inside a fresh 75-minute zone. That fresh 75 minutes is inside a high liquidity daily zone. This is the trade setup generally we do. This is the most safest trade setup. Then you might ask a question, then how can we can take a trade in this? That's why previously I explained an aggressive setup. If you are directly taking a trade on the 15 minutes, that is an aggressive trade. So this is an aggressive trade, but aggressive trade we won't take directly. We will identify the price action clues. If the price action clues are supporting, then only we go for an aggressive trade in a fresh 15-minute zone, which is inside a daily high liquidity zone. Look into this fresh 15-minute zone. This zone is created with a professional gap, pro gap. See how this pro gap is holding the prices. So let me draw a horizontal line to give you to give you some clarity. See, there is a pro gap here. Prices reached here, and then again the pro gap pushed the price up. Again reached. pro gap pushed the price. Again prices reached to this pro gap area. Again it pushed up. Even Monday, the prices entered into this pro gap area. Again it pushed up. But Monday it went a little deep inside the pro gap. That means by the time the prices enter into this fresh 15 minutes demand zone, most of the supply is consumed in this pro gap area. So by the time prices enters into this 15 minutes demand zone, most probably demand exceeds the supply, and then the pending orders in this 15 minutes demand zone will push the prices up. So such kind of trades we have seen earlier also. In one of the videos earlier, I think few days back, maybe a week back, or even maybe 5 or 6 days back, so I have explained in a video called with a name, aggressive trade setup. There I explained how to trade aggressively with the help of price action clues. So please look into that video. Same explanation I have given even there. But we have seen a successful trade. But here we are yet to get the trade. If you feel this risk is within your limits, if prices are entering into this area, those who want to go for the aggressive trades are always risky compared to the high liquidity zone trade setup I explained to you. But still, if the price action clues are supporting you, and if you are convinced with those price action clues and the risk is very minimum, that is most important. Because if it is stopped out, you should not get a huge loss. You should get a very minimal loss. So in such kind of situations, you can go for this aggressive trade setup. So maybe you can keep this stock in your watch list. So this is about Tata Chemicals, but today we didn't get a trade in this stock. That is what you should remember. And the next one, what is the next one? AU Bank. We have a high liquidity supply zone. In this high liquidity supply zone, it is a fresh zone. The daily high liquidity zone itself is a fresh zone. But we didn't find a 75 minutes near the zone, supply zone low. We didn't find. So that's why I have fine-tuned a little deep. If you go to the 75 minutes, here you can find. This can be treated as a failed ERC candle because this candle is larger than the normal base candles. So that's why we can take this as a failed ERC. Failed ERC can be used in the leg-in. That is what I explained earlier. And then we have a base candle, we have a drop candle. So that way I have drawn this 75 minutes supply zone. But prices are just before this 75 minute supply zone, it pushed it down. That way we didn't get the trade. But some of you might have observed an interesting zone at the lower time frame. So let me go to the 15 minutes time frame. So here you have a drop, base, drop. But drop candle is very convincing, right? It's not maybe a little bigger than an average candle. But maybe some people may accept, some people definitely may not accept in this area. But if you go to the 5 minutes, there you have a clarity. Go to the 5 minutes zone. So look into this. We have a rally candle, we have two base candles, and then we have a drop candle. So this is looking like an excellent supply zone, but it is a 15 minutes, 5 minutes supply zone. So we may think because this 5 minute supply zone is inside this high liquidity zone, we can take a trade. Generally, we may think like that, but that is not acceptable. This is an aggressive trade. That is what I am saying. Most of the times, what happens? These zones will be stopped out. Immediately, the prices will go above, a little above, and then again turn back. Such kind of things will happen most of the times. Sometimes prices enters into this zone and then they come back. It looks like a successful trade for you. You might be happy with that. But many times such kind of zones will be failed. So completely it is a luck based. It is a luck based. Generally we don't accept such kind of luck based trades. We go for aggressive trades when if price action clues supports. Or we go for this 5 minutes trade when if this 5 minutes is a high liquidity zone. This is a high liquidity zone. Definitely we take trade in this. We don't miss this. This because 5 minutes is a high liquidity, which is again inside a daily high liquidity zone. Only those two scenarios we take the trades. The first one is either it is a high liquidity zone, which is inside the again daily high liquidity zone. This is the first scenario. Second scenario, this is not a high liquidity zone, but this is we want to consider this as an aggressive trade with the help of the price action clues. That is very important. But do we have any price action clues? No, we haven't. We haven't seen any price action clues. What is price action clue? Maybe price would have went near to this and then we are getting some rejections. That way we can confirm there is a huge order flow from the institutions. And another thing is if there is a pro gap. Do we have you seen any pro gap here? No, we didn't find any pro gap. Of course, there is a considerable move down after this from this zone. Maybe that is one positive factor. But that positive factor doesn't enough for us. We need more clues, more price action clues. We haven't seen any rejections from here. We haven't seen a pro gap from here. Look into the historic data here. Look into the price action. We haven't seen prices never came near to this and got a rejections from here. We haven't seen any. And today directly price entered into this zone. See, almost close to the distal line it went. Maybe just a gap of maybe 1 rupee or few paisa, maybe 20 paisa, 30 paisa with a gap. Again it came back. That means those who have taken a trade in this zone, maybe they could have been a lucky people today. They got enough good profit. They might have got a good profit today. But we don't take such kind of trades. If anybody would have taken a trade, it is purely a luck based. You got the profit just because of luck based. See how deep prices went? Most of the times what happened? The prices go even beyond that. And your trade will be stopped out. That's why we don't take 15 minutes and 5 minutes directly, even though they are inside high liquidity daily zones. Our trade setup is we have to find a fresh 75-minute zone inside a daily high liquidity zone. If the 75 minutes is not fresh, that should also be a high liquidity zone. The 75 minutes also should be a high liquidity zone. If 75 minutes is not a high liquidity zone, that should be a fresh zone. But that should be inside daily high liquidity zone. These are the rules we've been discussing for all these days. So that is the reason why I did not consider this trade for during the intraday. I am considering only those trades as per our high liquidity trade setup, whatever I explained earlier. Remaining trades, even though they are successful or even though they are failed, I am not at all considering them. So this is one such kind of trade. Maybe you would have got a good profit today if you would have taken a short trade. But I won't consider a valid trade for our trade setup point of view. The reason why I'm showing this is at least you have a learning what kind of trades we should not take. See, previously I was supporting this 15-minute zone trade for Tata Chemical. This 15 minutes. So let me go to the 15 minutes. I was supporting this. Again, in the next stock, I am not supporting the same 15 minutes or 5 minutes. The reason is here 15 minutes, the price action clues are supporting us. That's why we are accepting this as an aggressive trade. But in the next stock, AU Bank, maybe today it is a successful trade, but we are not accepting this trade. Sorry, the time frame is 15 minutes. I have selected 25 minutes. Sorry. So here I am not selecting this trade because price action clues are not in our favor, or we didn't find any price action clues. Because we didn't find any price action clues, we cannot justify our what to say, our trade decision. We cannot justify our trading decision. So that is the reason why we are just leaving it. So these points, if you get clarity, then you will be in a position to understand when to accept aggressive trades and when not to accept aggressive trades. Okay, the next one is Muthoot. We got a successful trade today. We got two successful trades in Muthoot. First, let me go to the daily time frame. And Muthoot Finance is a fresh high liquidity zone. This is a supply zone, and prices entered first time into this zone. What is our trade plan? If it is a high liquidity zone, we go to 75 minutes. There we will find a fresh zone. Here we have a drop. We have a base candles, three base candles. Sorry, we have a drop, three base candles, and again we have a drop candle. This is not a rally candle. This is a drop candle because of this gap. This entire candle is looking like should be reflected like a drop candle if you are considering the body from this gap area. That's why especially the legouts with gaps should be very careful to understand the type of the candles. Okay, this is a drop base drop. Some people may think this is a small candle. It is not actually small. See how sometimes how the setups will be changing if you expand. So this is a big candle. Big means a medium size candle. The medium size leg candle can be used for legging. The biggest problem with visual representation is when you zoom in or zoom out, the shape of the candles will be changed. Sometimes you may think it is a narrow range candle. The moment you zoom in, the narrow range candle looks like a leg candle. That is expanded range candle. So you should be very careful. So today the price entered into this area. So let us get into 15 minutes time frame. So in this 15 minutes time frame, it is looking like a drop, base, again drop. But what I did to minimize the risk, because the height of the candle is almost same as the 75 minutes level. So that's why what I did, I went to 5 minutes to reduce the risk. So let us shift to 5 minutes time frame. So inside this 75 minutes, we have a excellent, let me show you like this. We have excellent rally candle, you have a base candle, and then you have a drop candle. So you got clarity the moment you zoom in. You zoom out, see here, because of this huge gap, how the shape of the candles are changed. That's why you should be careful. You should not conclude any decisions like this is not a valid demand zone or valid supply zone. You should not make comments. You have to properly play. Sometimes because of these gaps, the visual representation will give you a wrong impression. So that's why what I'm doing, I'm throwing this candle out of our visual area. See the moment how the candles are looking like. Now we have a rally, drop, base, and see the drop. Okay, now we have drawn a 5-minute zone, and today price entered into that 5-minute zone. Here we got two entries. The first entry is at 11:20, 5 minutes candle, and second entry is at 11:25 immediately, the next 5 minutes. So around 10 minutes the price moved within this area. After that it came down, came down, came down, and reached this 5 minutes. But you may ask a question. In general, we look into 15 minutes to reach our target, right? Yes. So look into the 15 minutes area. So the same thing is also, we have a drop, we have a base candles, and we have again a rally candle. We have, this is a 15 minutes demand zone. The prices reached into this 15 minutes demand zone. This is the one. Sorry, not this one. This is about the second trade. We got two trades. So this is the one I'm talking about. This is the rally. We have three base candles, and again we have a rally candle, expanded range candle. So inside this 15 minutes, again I have identified a 5 minutes, so that I get a better target to get. Otherwise I should have exited here. Already today's target is very less. So that's why what we did to check whether in case there is a possibility to get a better target, went to the 5 minutes. In the 5 minutes, we have this expanded ERC candle, then we have three base candles, again we have a rally candle in the 5 minutes. So when we got the trade at 11:25, we got the trade. Or maybe even before 11:20, 11:25, even in 11:30, within these 15 minutes. Even the leg out is also came from this supply zone. And when it reached the target at 11:45, it reached the target. So maybe at 11:20 we got the entry, and 11:45 it reached the target. So how many minutes? 25 minutes. In just 25 or maybe half an hour, you say, within half an hour our trade is completed. It reached the target. Do you know how much profit it has given? It has given 4,647 rupees 50 paisa, which is 3.5% return on the investment. Of course, it is lower than our average return on the investment during the intraday. Our average return on the investment is around 6.1%. But today we got less percent, 3.5%, but we have to accept. Because the distance between our trading zone and the 15 minutes supply zone, the distance is very less. Because there is a less distance, we have to accept. But the good thing is we got the profit within half an hour. Within half an hour we got the profit. Not only within half an hour, again we got one more trade. But see here, this is already tested zone, that's why easily it is broken. But there is a high liquidity 5-minute zone just above this this 5-minute supply zone. Just above this 5-minute supply zone, there is a high liquidity demand zone. And this high liquidity demand zone is just, it is having a zone confluence with 75 minutes. The 75 minutes, this entire thing is a 75 minutes. And this high liquidity 5-minute zone, there is a zone confluence. And moreover, this is there just above this. This can act as a trap. Because those who did not identify this 5 minutes high liquidity zone, if price, the moment price go beyond this 75 minutes zone, people may think the stop loss hit, and they will close their trades. They will exit from their trades. So that's why this is acting like a bull trap, this 5-minute zone. So to bring you clarity, let me delete this 75-minute zone. Because this 75, actually our stop loss is supposed to be the distal line of this 5 minutes high liquidity zone. This is a high liquidity zone. That's why it supports multiple tests. So let me delete this. Even let me delete the newly drawn now. This 5 minutes. This is the one where we got the entry. First entry we got in this supply zone. Let me delete that also, because I already explained it and we have seen the trade. Now look into this. This is a high liquidity zone. See, we have a drop candle, medium size, and we have a base candle, and we have a leg out candle. And this is how many times? See here, this is the first test here. After that, prices went down and again came back, and we got the second test. And again prices went down, came close to this. Maybe institutions might have added new orders somewhere here. That's why we are seeing the rejections. That is what generally happens in high liquidity zones. You may see these differences in a 1 minute time frame. Probably if you analyze, you will understand how institutions are creating new supplies at 1 minute level. Because we are limiting ourselves maximum up to 5 minutes. But if you really analyze 1 minute, you will see the new institutional supply zones. So again here, see, it went to the zone, again came back. And here price is holding. That means there is a heavy institutional order flow in this area. This is not only high. If you don't know this is a high liquidity zone, these price actions will help you to understand about this zone. That's why always I say you need to observe the price action before you take a trade in any zone. The price actions, mostly the price actions will give you the best clarity. Price action will tell you mostly this zone is going to be a successful zone or a failure zone. That's why you have to build that skill. How to understand the price action in a better way. These price action clues only will help you. These price action clues only bring you best profits for your trades. See how I am observing, follow the same way. Most of the times the successful trades I am identifying, it is not a great skill. It is just applying some common sense. That's it, nothing more than that. So one thing is confirmed. Okay, because this is a high liquidity zone, I am aware of that, I know this is a high liquidity zone. But you may not be knowing this is a high liquidity zone. But still you can find there is a lot of order flow here by seeing all these rejections, by seeing multiple testing in this zone. See all these rejections in the earlier, that means there is a lot of order flow here. So next time when price enters into this zone, definitely it will give you a success. At least one trade it will give you a success trade. Because before entering into this zone, there is so many rejections earlier from here. Now today what happened? The second trade. So this is our first trade. Here we got our first trade. This is the area we got our first trade. Sometime before we have taken. Now price went. In which candle it went? At 12:55 candle, 5 minutes candle, we got the entry. And when it reached the target? At 14:10, it reached the target. This time we exited here itself, just before entering into this zone. We didn't wait until this area. Maybe if you would have waited for this target, the demand zone below this newly drawn demand zone, you would have got even better profit. But my profit I calculated up to this above zone. Why? Because always we look for a 15 minutes, the nearest 15 minutes is our target. Let me go to 15 minutes time frame. You will get clarity about this demand zone. Look here, we have a drop candle, we have 3 base candle, and then we have a rally candle. Okay, this rally candle is smaller than the drop candle. I mean, this leg out is smaller than the leg in. But this candle itself is a considerable leg out candle. That means large leg candle. It is not a medium leg candle. It is a large leg candle. So it is a leg out, but it is lesser than the leg in. Previously also I told you there is no relation between leg in and leg out. Some people say leg in should be smaller than leg out. That is wrong. Leg in, I clearly told, even in my lessons also clearly explained, leg in could be a medium size leg candle or it could be a large size leg candle. But leg out should be a large size leg candle. Anything above the medium size leg candle is a large size leg candle. So that's why what I did, I changed my target. Because this is a newly created demand zone. Because who knows, price may touch again, it would have gone and completely violated this zone. Who knows? That's why the moment price entered into this zone, we have to exit. Maybe later, luckily, price went up to the demand zone below this newly created 15-minute zone. But we don't know whether the price will really go into this or again from here it will turn back and go up. So, from this supply zone to this newly created 15-minute zone, we got the new profit. So, this is the second trade on the same day. So, in this trade, we got 4,950 rupees, which is 3.73%. So both trades together we got 7.2% profit. Both the trades together. But individual trade point of view, it looks like you got only 3.73 for this trade, and previous trade you got only 3.5% return on the investment. But as a whole, both together, it reached our intraday target. That is what you should observe. So this is about a successful trade from Muthoot Finance. So these are the 3 high liquidity zones from our yesterday's report. But we already kept one stock in our watch list. You know what is that stock? For the last 10 days, continuously it is giving profits for us. Maybe only the last trading session only it didn't give. But previously, continuously, every day we got the profit. What is that stock? Maybe you are right. It is HDFC AMC. Even today we got the trade. A successful trade. Let me go to the daily chart. See, we have drawn a fresh zone, 75-minute zone, where we fine-tuned at the 5 minutes level. So price did not reach last time into this fine-tuned area, and today price entered into this. This is a 15 minutes zone. Inside 75 minutes, This is the 15 minutes time frame. Let me go to the 75 minutes time frame. So this is the 75 minutes. Generally what we do, we don't take a trade if it is the 75 minutes is not a fresh. But previously what happened, it is already tested this. But still we can take a second chance because this time we are taking a deep inside. This is the place, the actual origin is there. The origin. From where? From the 15 minutes point of view. The price, see, with a gap, see, you should also observe there is a pro gap. There is a pro gap. So by considering all these factors, we can take the second chance. Maybe third might be risky. See the pro gap here. We have a rally, base, drop. And this pro gap area is started from this 15 minutes area. By the time price enters into this, the remaining, because already pro gap area, some of the prices are, some of the pending orders are consumed here. Now some more pending orders should be consumed. By the time prices enter into this, definitely the demand will be weakened. Definitely the supply will dominate the demand. That means demand, supply exceeds the demand by the time prices enters into this. Generally that is the way I analyze my charts. Because there is a pro gap area, price did not enter into this horizon from where the 15 minute supply zone is started. So what I did? So went to the 15 minutes. Here we got the trade, 15 minute zone. And we have drawn this zone last week, during the last week. We kept it on the charts. This is not drawn today. This is drawn previously. So you are already aware we are looking for a trade in this area. Today we got. And after that, see, it reached the rally, base, rally. This is a demand zone. So 15 minutes target received. See, in most of the trades, we are looking for 15 minutes area only. That means high liquidity zones are having the capacity to push the price up to the 15 minutes level. So these are all DIT targets. They are not hourly income targets. Hourly income targets is your intraday targets, that is on 5 minutes time frame. But we are getting intraday target. We are getting intraday profits not based on the intraday trading. We are getting intraday profits based on the DIT trades, short-term trades. We know DIT trades mostly you hold for 2 days or 3 days or maximum 1 week. But here in high liquidity zones, DIT profits we are getting during intraday itself. That's why for all these days, for the last 1.5 months, you've been observing all the trades. We are getting huge profits. Even today also, we got a very good profit here. So around 1345, it reached the target. And the profit is for HDFC AMC 12,795 rupees, which is 7.89% return on the investment. So another successful trade from HDFC AMC. Why we got so much success in this? Because HDFC AMC is moving between two high liquidity zones. Demand zone is a high liquidity zone. Supply zone is a high liquidity zone. Until one of these zones broken, the price will be continuously moving between them. Both these high liquidity demand zone and supply zone are fighting each other. That's why we are getting multiple trading opportunities. Assume supply zone is broken, high liquidity supply zone. What happens? Prices will go up. Again, by the time when they come back to this high liquidity demand zone, it may take several weeks of time or sometimes several months of time. That way we don't get opportunity in the same stock. But this scenario is different. Supply zone is not letting the prices go away. Demand zone is not letting the prices go down. I think this is the seventh trade or eighth trade in HDFC AMC during last 10 days, 2 weeks time period. Okay, this is about a successful HDFC AMC trade. And from Monday's list, we have one more stock, IDFC First Bank. See today what happened? It is stopped out, right? It looks like stopped out. It's not really. There was a 5 minutes zone here. We have a rally candle, base candle, and drop candle. And here, a lot of liquidity is there. How can we say there is a lot of liquidity? Price action close. See the rejections here. After that, price went a little above this. And today, and recently again, even a little above this. Slowly it is consuming. So this is a fresh 75-minute zone, but this 5-minute zone is in confluence with 75-minute zone. Most of the time when they are a little above on confluence, they will act as a traps. So let me delete this 75-minute zone to bring you clarity. See here. Actually, this is a 5 minutes high liquidity zone. This is there completely inside daily zone only. It is not outside the daily zone, but little above the 75 minutes price zone we have drawn. This is the way you need to find where actual your order flow is there. The real order flow that if you are able to trace, actually this is called horizon. From here the actual orders are starting. If you find the horizon, then you get a lot of profits the moment the price goes. Most of the times these horizons will act as high liquidity zones. So that means inside a daily high liquidity zone, we have a 5 minutes high liquidity zone. And today again, price entered into this zone. Price didn't go above this zone, just maybe around 20 paisa before this distal line, again turned back. Definitely next time this zone will be broken. The reason is mostly all the orders are consumed. Just at near the stop loss, whatever the pending orders are there, by the time prices reaches there, the completely demand is consumed by the supply and pushed down. Next time and again institutions create new orders, maybe definitely this zone will be broken. So you cannot take any trade because it is completely consumed. Unless institutes again creates a new zones inside this. Otherwise this will be broken. How the zones will be broken, I already explained. Again today also I will show you two more stocks. I kept them in my watch list and watching for the last 2 weeks. The reason is 2 weeks back I told you those zones will be broken. And today it happened. I will show you. See, finally it reached the target. Actually, our target is supposed to be here, but there is a gap here. Because the gap is here, the newly created this demand zone is used. At what time it reached? At 2:45 it reached this newly created demand zone. And this newly created demand zone is the target. And the profit we got from IDFC First Bank is 5,250 rupees, which is 3.92% return on the investment. Of course, this is a small return on the investment compared to 6.1 our average return on the investment. But profit is a profit. We have to accept it is a successful trade from IDFC First Bank from our Monday's trade, from our Monday's report. Sorry, this is not Monday's report, Sunday's report. During Diwali day, we generated the report. But that day is only 1 hour trading day. That day we got only IDFC First Bank, only one stock identified in that report, and that stock we got a successful trade today. And similarly, last Monday we got a successful trade on Zendal Steel, and today again it gave another trade, second trade it has given. Let me go to the Monday we have drawn a supply zone somewhere here. Let me show you. During Monday's trade, where we took the trade. Somewhere here we took the 75 minutes zone. The blue color line what I have drawn, just below this there was a supply. Because this supply is not having very clarity, because we consider this as a leg-in. Because it is a ERC candle, but for some people may not accept this is a ERC candle. Because that clarity is not there, what we did, we went one step down and inside this area we fine-tuned and we identified a 15 minutes or 5 minutes zone. I didn't remember, but Monday. There we got this entry here. After that price went down and we got a good profit. And today what happened? Because this 75-minute zone is already tested, see, it is broken. That is the reason why we are looking for fresh 75 minutes inside high liquidity zone. See, daily demand zone will keep on testing. But our trades are not on the daily demand zone. Daily demand zone is only a HTF zone. Then where we take our trades, one time frame below 75 minutes. And that 75 minutes we will fine tune to either 15 minutes or 5 minutes to minimize the risk. That's why our 75 minutes should always be a fresh zone. That is point number 1. Our 75 need not be a fresh zone if it is a high liquidity zone. And third point, 75 minutes need not be a fresh zone if you don't have clarity it is a high liquidity, but your price action clues are supporting. Then also we take second entry or third entry in that 75-minute zone. You take price action clues only if you don't have clarity if the 75 minutes is a high liquidity zone. In all these three scenarios only, we will trade inside the 75 minutes. So previously drawn 75 minutes is broken easily today. Now the next 75 minutes zone we identified here. What is that? We have a drop, we have 3 base candles, and then we have a drop with gap, a little gap. And inside we identified a 5-minute zone where we found the real origin in this 5-minute zone. And which is tested today. Almost it went to the distal line. The distal line of this 5-minute zone and the high of this candle are exactly same. What is the high? 658.20 paisa. The distal line is also 658.20 paisa. Let me show you. Look into high of this candle. 658.25, 658 rupees 25 paisa. Here also 658.20 paisa. 5 paisa below. Maybe just reaching the distal line with 5 paisa it missed. Anyway, our stop loss is above 25 paisa. 658.25 paisa, our stop loss is there. Generally, we add stop loss buffers and then we will keep our stop loss. Okay, this is the trade we got, and the risk is also very minimal. Okay, now where is our target? Your target is supposed to be on 15 minutes time frame. Here we have a rally candle, we have base candles, and then we have a rally candle. So somewhere it should reach here. But there is a gap is there. That is the first concern for us. So at least till this gap area we can keep our target. But today it did not reach. So where to exit? So go to the 5 minutes. So what's happening here? Prices are moving here only. Almost how much? From 1 o'clock today, from 1 p.m. till 2:20 p.m. prices moved here. Most of the time intraday you will book the profit during that period. Before 12:25 probably, I mean 2:25, you will book your profit. When prices are moving in the area, narrow area, what does it mean? Demand is equal to the supply. In supply zone, what should happen? Supply should dominate the demand. But is that happening? That is not happening. That means that is your first signal. Immediately you should alert yourself. Something wrong is happening. Maybe in 2 candles or 3 candles or maximum 6 candles if it happen, okay, you can accept. You can say that is a zone formation. Now here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 candles prices are moving here. Then you have to take a decision. That's why I have drawn this blue color line. Exit after 6 or 7 candles, you exit there. Because it is eating your time. Okay, for future traders, there is no time decay. But any option traders definitely have a time decay. And moreover, the time is also your intraday profit booking time. And one more thing, important clue, previously also once I explained you. To this line, if you verify your return on the investment, it is 6.65%, which is above 6.1 your average intraday return. You need not wait for a long period. Maybe after 5 or 6 candles, you can take a decision. Already you got your sufficient return on the investment during the intraday. Because most of the time what happens around between 6 to 7% return on the investment area, you can find, mostly you will find a 15-minute zone. But here you didn't find the 15-minute zone. Your 15-minute zone is far, far, far away. So you can't expect 15% or 20% return on the investment for in stocks. Maybe once in a while, some stocks you will see luck and you will find. But our average means you have to respect that our average return on the investment. And price direction is not clear here. So take a quick decision and exit. You already got your average return on the investment. What 15 minutes zones generally gives you that to get the target. Previously also we have seen such kind of profit booking techniques. Maybe this is the 5th time or 6th time I am explaining such kind of profit booking. Because we are following different techniques to book our profit when price action is not clear. Prices are not reaching our actual target areas. At the time we take our decision based on these techniques and we will exit from our trade. So Zendal Steel has given 12,500 rupees profit, which is 6.65% return on the investment. And next time don't take trade here. The reason is the prices already went deep inside. So now you can delete this supply zone from your chart. So if institutions creates a new 75-minute supply zone, push the price down. Again, next time when prices entering into this area, you can take the trade. Otherwise, this zone will be easily broken. That I will be showing you now. How the zones will be broken. Even before that, There are two more important stocks we kept in the play in my watch list. These stocks came from our last week's stocks, the last 4 or 5 trading days stocks. So one is Tata Communication. We didn't get the entry, but still, why I kept this in my watch list? Because this is a fresh zone. Prices haven't entered into this high liquidity zone. So any fresh high liquidity zones you identify, keep them in our watch list. Mostly you get good successful trades. If it is the daily zone itself is a fresh. If the daily zone is tested fourth time, fifth time, sixth time, also you are getting profits. That is a different story. But this is daily itself is a fresh zone. And the next one is ICICI GI. Why I kept this stock in watch list, you know. Those who attended my sessions for about 10 days back, you know why we are monitoring this stock. Remember, ICICI GI, this trade setup is almost looking similar to one of the HDFC AMC trade setup I explained earlier. Not the recent trade setup in HDFC AMC. Few days back, we have seen a high liquidity supply zone inside HDFC daily supply zone. So this trade setup exactly looking like that. That day I compared this chart with the HDFC AMC chart. The rejections and the blue color line we have drawn and a gap from this 5-minute zone or 15 minutes, whatever it is, from that zone, the gap. See today again, prices are entering and again there is a rejection from here. So by the time price reach here, we get a successful trade. Those who wants to take a little extra risk, the moment price crosses this blue color line, you can take a trade, because what happens? There is a possibility that price cross blue color line, it does not enter into this 5-minute zone. In between, again, it will return, come back, and it will give you a good return. That possibility is there. So if your risk management permits, you can take the trade. Otherwise, you have to wait until price enter into this area. And the Polycab is another one I kept. This is also from our last week, maybe last Thursday or Wednesday it is generated, the report. The reason is this is also a fresh zone. So I am monitoring. Today narrowly missed. It didn't reach this area. Narrowly missed. This is the origin. Actually, the actual order flow is there. This is the 5-minute zone. The real order started. Just a few minutes. See how much profit it has given today. Do this zone works next time? I'm not in a position to tell, because already the 75 minutes zone is tested. But before entering itself, it came down. Maybe we can assume there is a strong order flow. I am hoping that we may get a successful trade, but I'm not giving guarantee, because still earlier price action clues are not available for this 5-minute zone. This is the first clue for us. Just before there is a rejection and then came down, price came down. If anybody would have taken this trade, because generally most of the times, you know what happened? Just before entering into the zone, maybe with the 2 rupees or 3, this is a 5,000 rupees stock, maybe a 5 rupees or 6 rupees gap, with the buffer, you will take the trade. Most of the people will do. Like 0.1% they will add the buffer. So 5,000 rupees, 0.1 is around 10 rupees. So some people may get a trade. If they would have got a very good profit today. But anyway, according to me, it's not a trade, because the price did not enter into this 5-minute zone area. Why I kept in my watch list? Because it is this 75 minutes is a fresh zone. Price entered into the daily supply zone. But at 75 minutes level, it didn't enter, because there was a lot of rejections. That means there is a huge order flow is there in this area. Hoping that next time also this trade, this zone will work. If the risk is very minimal, those who wants to accept the trade, there is nothing wrong in trying this, even though the 75 minutes is tested. Because all these candles before the 75-minute zone, they are indicating, what they are indicating, there is a heavy order flow in this area. Okay, this is about polycap and the discussion, the actual discussion, what I want to explain. How a zone will fail, that is what we discussed a few days back. There is a video heading, when a fresh zone can fail. Not only fresh zone, even tested zone, the high liquidity zones, when they will fail. I will explain all the points earlier. And 10 days back, if I am not wrong, we discussed about these two stocks, Balakrishna Industries and Ultra Cement. That day I told you both the zones will fail. That's why I kept in the watch list. I've been observing when they are going to fail, and today it happened. And this is pierced. This high liquidity supply zone is pierced. Why it is pierced? Because previously we analyzed after this candle, after 25th October, when price came near here, I think if I am not wrong, in this candle, that is on 3rd November, Friday, not November, even before itself. In one of these candles, our software generated a report, stocks near the supply zone. So at the time I told this zone will fail, because see how much orders is already consumed in this candle. And after that we didn't find any fresh 75-minute zone. Let me go to the 75 minutes time frame. We didn't find any fresh 75-minute zones here. So that is one of the reasons why I told this zone is going to fail. And that is what happened here. Here also the structure is not clear to consider this is a supply zone, 75-minute supply zone. We don't have a proper leg out candle. Without a proper leg out, how can we consider a supply zone, 75-minute supply zone? And moreover, if you go to the lower time frame, it consumed all the, see this candle consumed all these lower time frame zones, all the orders from the lower time frame. See, today it is easily broken. That's why you should remember, because every high liquidity zone is not a tradable zone. High liquidity zone supports multiple trading gives multiple trading opportunities. When they won't give trading opportunities, if you don't find a fresh 75-minute zone inside the high liquidity zone, or if you don't find again a 75 minutes high liquidity zone inside a daily high liquidity zone, that is another possibility. And third one is 75 minutes is a tested zone, but price action clues are suggesting us we can go for another trade, second trade. The price action clues are supporting you, and that also we can take. But nothing is there in this chart. The day when we analyzed, none of these conditions satisfied. That's why I made the statement some 10 days back, if I am not wrong. I said, this stock, Balakrishna Industries, don't take any trades, it is going to fail very soon. That is what happened. Same thing I did for Ultratech Cement, but Ultratech Cement, the day I made a statement, this is going to fail, and I told you, at the time I drawn this blue color, the day when I gave explanation 10 days back, I have drawn this blue color. Within this small area, if there are any institutional pending orders, you can take a trade that might give you a trading opportunity, but don't take that, because it is almost close to the distal line of high liquidity zone. There are higher chances of fail. That is what I explained after this candle, if I am not wrong. That is after 19th October. Let me go to the daily time frame. I will be in a position to tell you when the report is generated. Yes, in one of these candles, the report has given. That is on either 31st October or 2nd November. One of these candles, our report has shown our stock is, prices are near the supply zone. So on that day, I explained. See, already here consumed the orders. After that, we found only one high liquidity zone, but when we go to the lower time frames, the structure of the price is not very clear here. We didn't find any origin. See how price is moving in a zigzag way. It is moving. There is no clear supply we have seen here. That's why I told the 75 minutes is not a good 75-minute zone. There is the actual origin of the supply we didn't find. That is the reason why I didn't give guarantee for the supply zone. It may work, that is a different story, but I didn't give guarantee. What happened? After price reached, okay, it got some resistance here, but now today easily it is broken. So the point you should understand, sometimes easily we can predict when a zone can fail. Maybe these concepts nobody has a thought earlier. People will tell you, okay, it is a fresh zone, take an entry. But fresh zone also can fail. Easily we can tell by observing the price action at lower time frames like 5 minutes, 15 minutes. They give you better clarity. They will tell you this zone quality is not good. Such kind of skill you have to build. It is not a great skill. You just shift to the lower time frames inside that zone and you observe the price action. If you find any good supplies, probably the trade will work if it is a supply zone. Similarly, if you find any good demand zones, if it is a demand zone, your higher time frame is a demand zone, you will get a successful trades. Otherwise, well before you can tell maybe this zone is not really good. When it is not really good, the structure of the zone is not really good. Why should unnecessarily we take the risk? Look for some other stock. When you don't have opportunities, then you have to worry. Then maybe you take a risk and you can buy that particular stock. But every day our scanner is providing good number of stocks. And every day good successful trades we are seeing. If not every day, at least majority of the days during the month. Of course, a few days trades won't work. Won't work means won't execute. Before getting into the zone itself, the prices go in the opposite direction. Few days it happens because of the market conditions on that day. That day, if you don't get a trading opportunity, relax on that day. But the day when the trade executes, mostly we are seeing success. Failures are very less, especially in terms of booking the profits during intraday itself. Most of the times we are getting DIT profits during the intraday. Not most of the times, majority of the times. So the reason why I kept both these stocks in this list is just I want to show you. Previously we discussed and I told these zones will fail. These are all high liquidity zones. Normal zones I would not have bothered. These are the high liquidity zones. We know that high liquidity zones work again and again. But there are the times you are in a position to tell your high liquidity zone is going to fail. So these two zones, that is what going to happen. Even few more zones also I explained today. They are going to fail. We got deep entries today. So that's why I made the statement. Next time they are going to fail unless institutions again create a new zones inside that. That condition it will work. You get again another opportunity. Next time prices are entering into that zone. Okay, this is about our discussion. It's a lengthy discussion today, but it's a lot of learning you might be having today. It's a very important session. Now what we do, let's go back and generate our demand and supply zones for daily time frame later for 75 minutes and 15 minutes. So let us generate demand and supply zones for the daily time frame. Entry time frame is daily. Let us find the stocks which are near to the daily demand zone. So these two stocks are filtered. So Tata Chemical is again there in this list, which is near to the high liquidity demand zone. So let's go back. Entry time frame is daily. Let us filter the stocks which are near to the daily supply zone. So total 9 stocks are filtered. Are there any high liquidity supply zones? We have ITC is there, but it is already pierced. This zone is pierced. So we don't look into the pierced zones. We have SBI Life is there. It is a high liquidity zone. It is already tested 3 times. But remember, you have to look for a fresh 75-minute zone in this zone. If you don't find a fresh 75-minute zone, then don't consider. We want to consider either again that 75 should be a high liquidity zone, or your price action clues should support for your trade for the second time. Okay, this is about stocks near demand and supply zones. As I told you, let us generate bullish setup stocks and bearish setup stocks. So what is bullish setup? What is bearish setup? So let me tell you by selecting the parameters. First, let me tell you the bullish setup. Which time frame? Daily time frame. So daily time frame bullish setup means always you have to look for demand zone entries. So that's why my entry zone is a demand zone. That is daily demand zone. Okay, bullish setup should be based on the trend. So what is the trend you are using? Zone violation trend. We have two trends. We have a swing high-low trend that is also called pivot high-low. And another one is your zone violation. Let us focus only on the zone violation. Generally, you think if the trend, which time frame you look for the trend? Intermediate time frame. We have 3 time frames. Entry time frame is the lower time frame. Trend is the intermediate time frame. And your curve or location is on the higher time frame. These 3 time frames generally we look for. So because you selected daily time frame, your lower time frame is daily, your intermediate time frame is weekly, and your higher time frame is monthly. So for bullish setup, you don't bother about daily trend. We look for the trend on ITF. So your ITF trend should be uptrend. Uptrend indicates bullish. But in bullish setup, you not only look into weekly trend, you will also look into the monthly trend. In general, you don't bother about monthly, but in bullish setup, monthly trend is also important. So monthly trend could be either sideways or uptrend. Either one is acceptable. So that's why I'm selecting up or sideways. So we have selected trend is up or sideways, and weekly trend is up. So apart from the trend, what else you should look for? You should look for location or curve. But remember, rather than selecting the curve, the price direction plays the major role. Generally, what you think? Low on the curve or equilibrium is safer. That's true. Low on the curve or equilibrium. But low on the curve, equilibrium are also not safe. If the price direction is towards the down, exactly the same way, high on the curve is also safe if the price direction is towards the up. Even high on the curve, you can take the trade if the price direction is towards the up. So that is the reason why we don't bother about the curve. Either curve should be low on the curve should be equilibrium, or the curve should be high on the curve. All the 3 are acceptable. But what is not acceptable? Once prices enter into the monthly supply zone. I repeat, once prices are entered into the monthly supply zone, then trades are not acceptable, even though it is equilibrium or even though it is high on the curve. So that is the reason why rather than taking the curve, I am selecting another parameter in this strategy builder called price direction. Okay. So here price direction always we measure based on HTF time frame. What is our HTF? Monthly. So in monthly price direction should be from demand zone to supply zone. The moment prices entered into the supply zone, price direction will be changed to supply zone, to demand zone. So that is the reason why demand zone to supply zone. But here you have one more condition is also there. Sometimes monthly supply zone may not be available. In which scenario? If demand zone is traveling towards the all-time high, that means there are no more supply zones for that particular stock. When no more supply zones, if the monthly price is near the all-time high, you won't find monthly supply zone. So that means your price direction should be either demand zone to supply zone or demand zone to all-time high. Both conditions we have to take. Because you don't have a filter here, demand zone to supply zone or all-time high, because purposefully I didn't define that condition, because we should have clarity when you are doing trading. Is there a supply zone or is there an all-time high? So that's why what we do, first we will generate demand zone to supply zone, after that demand zone to all-time high. So demand zone to supply zone scenario. Let us take. So now what are the conditions we have defined? One is entry time frame is daily. Because this is a bullish trade setup, entry zone should be a demand zone. And because this is a bullish trade setup, your monthly trend could be either up or sideways, but weekly trend must be an uptrend. And finally, your price should travel from demand zone to supply zone. Currently, your monthly price direction should be from demand zone to supply zone. That means prices haven't reached into the supply zone. In that case, the direction is demand zone to supply zone. If prices entered into the supply zone, then the direction is from supply zone to demand zone. Because now prices will go down now. That's why based on the price direction, monthly price direction, I'm considering monthly price direction we are taking. Because curve is also based on the monthly time frame. That's why instead of curve, I am selecting price direction. The reason is bullish setup. You can trade whether prices are in low on the curve, whether prices are in equilibrium, or prices are in high on the curve. But the only condition is price should not reach into the supply zone. Not yet reached into the supply zone. Which supply zone? Monthly supply zone. In that scenario only, bullish setup is safe. If price direction is changed, that means now prices are moving from supply zone to demand zone. Even if the price is at low on the curve, even the prices are at equilibrium, you should not trade that trade. Most of the people get losses because of that reason. These points you may not observe during your demand and supply zone courses you are learning. So be careful. Focus on this point carefully. Anyway, during advanced trading strategies, I will explain in the training in our training program. But it takes some time for you to get into that level. Maybe in another one and a half month training, you will be getting into that level. So for those who already learned, remember these points. That's why I have given this explanation. Now let us generate. So how many stocks filtered? Total 5 stocks. Currently, these 5 stocks are traveling towards the monthly supply zone. And the second thing, all these 5 stocks monthly trend is either sideways or uptrend. See, either sideways or uptrend. And your weekly trend, ITF trend, compulsory it should be uptrend. LTF trend you don't bother because your entry time frame is at LTF. If there are any pierced demand zones, you can ignore them. Always look into this column, PIE, pierced. And also look into the zone violation, zone achievement. Zone achievement, VOZ should be there. Violated opposing zone. If the zone violation, zone achievement is not there, don't give priority to that stock. And next, odd enhancer score is also there. It is out of 15. This score is, I am showing this score out of 15. And the last two columns, risk and reward. Based on that, you can calculate RR. Reward by risk, it will give you the 1:, whatever the value, that value you get. Risk reward. So this is about, and remember, this is a zone high and zone low. Still you can reduce because this risk reward I calculated based on type 1 proximal line. It's not based on the type 2 or type 3 proximal lines. Still you can improve this risk reward by selecting type 2 proximal entry. Please remember that point. So these are all the stocks, but there is a problem in this list. What is the problem? Suppose if there is a weekly zone in between. Weekly zone is like a speed backer. Which weekly zone? Because this is a bullish setup, I'm talking about weekly supply zone. So prices are moving from monthly demand zone to monthly supply zone. In between, there is a weekly supply zone is there. Supply zone is like a speed breaker. What it will do? For some days, again, it will push the prices down. If that is the case, your daily entry may get stopped out. If the weekly is very strong, your daily demand zone might be stopped out. That possibility is there. So to overcome that problem, what we do, let's go back. We will also change the weekly direction also. Currently, the weekly direction could be any direction. Now I am selecting weekly direction is also from demand zone to supply zone. Now it is a safe, much safer. Now let me filter. Now how many stocks filtered? 4. I think previously also 4, right? Okay, now there is no stopper for these stocks. That means there are no hurdles. Weekly supply zone could have been a hurdle, but these stocks weekly direction is also from demand zone to supply zone. That way you can consider these are all perfect bullish stocks. But what is the problem here? This is stocks having both demand and supply zones, especially monthly. Because most of the times what happens, there could be demand zone monthly, but there may not be any supply zones on the monthly time frame. Why? Because they are all-time high stocks. Most of the all-time high monthly stocks may not be having supply zones. So that is the reason why I am changing the direction as demand zone to all-time high. Let me remove the hurdle, the weekly hurdle. Later on, again, we will come back and filter. First, let us see how many stocks are filtering. Oh, we got a very big list. What is this condition? Monthly trend is either up or sideways. Weekly trend is up. And the direction should be from demand zone to all-time high. So all these zones, monthly zones are not having all-time highs. The list I am showing is not monthly zones. The list I am showing is daily zones because look into the time frame. The entry zone is daily. But internally, the software verified the stocks that are not having monthly supply zones. All these stocks are not having monthly supply zones. Total how many? Total 75 stocks are filtered. But There could be a hurdle. What is the hurdle? There could be a monthly supply zone might create disturbance for our trades. So that's why what we do, let's go back and let us select the weekly price direction should be from a weekly demand zone to weekly supply zone. Now filter. See, now the 65 stocks are filtered to now 12 stocks only. Remaining stocks are having a hurdle, weekly supply zone hurdle is there. If there is a weekly supply zone, that will disturb your daily demand zone. You have a daily demand zone, you have a daily supply zone, in between there is a weekly supply zone is there. So is your trade is going to be a successful trade? No. That is the reason why we should be very careful. Price direction should not be, weekly price direction should not be from supply zone to demand zone. It should be demand zone to supply zone. See here, the direction. Monthly should be demand zone to all-time high. Weekly should be demand zone to supply zone. Now the filter is reduced to 12. Now there is one more possibility is also there. Instead of demand zone to supply zone, it is also possibility that weekly demand zone to all-time high. That is also possible. Because all these stocks are not having all-time high zones. So that's why this is one list. This is a one valid list now. Now let us generate second valid list. What is the second valid list? The stocks are, weekly stocks are moving from demand zone to all-time high. So this is the list. All these stocks are having, all these stocks are not having either monthly demand zones or weekly, sorry. All these stocks are not having either monthly supply zones or weekly supply zones. They don't have supply zones. So total 39 stocks are filtered. So now you can trade your bullish trade setups based on these stocks. Remember, some of these zones are having pierced. So remove those pierced. Suppose in the filter, if you don't want the pierced zones, what I can do? I can set the pierced count as 0. So here pierced count. Which demand zone we are filtering daily? So set the minimum value 0 and maximum value 0. So that means pierced count 0 count is there, those stocks only will be displayed. Now let me click on top down strategy. Now how many stocks are filtered? These are all the first 24 stocks. And total 33 stocks are filtered. And we filtered for demand zones, not for the supply zones. For any demand zone, the green color, dark green color means the daily zones, these stocks, the daily demand zones are all-time high stocks. Always remember, dark green color indicates the stock is not having a supply zone. It is a ATH stock. And the light demand zone color indicates the stock is having a supply zone. That's why see here, this demand zone is having light color. And it is also having a supply zone. Light green color indicates the stock is having both demand and supply zone. The dark green color indicates the stock is a all-time high stock. It doesn't have a supply zone. All-time high stocks won't be having supply zones in any time frame. Currently we are displaying daily demand zones. See, look into the time frame. The list we are displaying daily. But filters we applied both on weekly as well as monthly. That point you should not forget. Based on that, we filtered the list. That means our software is analyzing multi-time frame analysis. It analyzed a monthly time frame, it analyzed a weekly time frame, it analyzed a daily time frame. Finally, the daily zones it is displaying. That is what you should understand. So this is about a bullish setup. Now what we do, let us go for the bearish setup. What is bearish setup? That also I will explain. First you select daily time frame. entry time frame is daily. Because it is a bearish setup, your trade should be only on supply zones. So that means all the conditions should be applied for the supply zones. All the filters, that is what the meaning. Okay. Why we are saying bearish setup based on the trend? So we are selecting the trend based on the zone violation. Okay, for bearish setup, the weekly trend should be downtrend. Apart from weekly, in bearish setup, monthly trend also we should define. Either it should be down or sideways. Either one is acceptable. So this is the filter, down or sideways. So we have set monthly trend as a down or sideways, weekly trend as a down. This is one thing. Okay, curve. Generally what happens, you look into the curve. But I already explained in the previously. The curve doesn't work properly when the price direction is in a wrong way. That is the reason why I am not focusing on the curve. Rather, I am focusing on the price direction. See, as long as prices are moving from supply zone to the demand zone, on which time frame? HTF time frame. Remember, curve always you focus on HTF time frame. That's why instead of curve, I am selecting the direction on the HTF time frame. That means currently prices are moving from HTF supply zone to HTF demand zone. In this example, monthly supply zone to monthly demand zone. So that is the reason why whether the prices are at the high on the curve or at the equilibrium or even the low on the curve are acceptable. Trades are acceptable. But trades are acceptable as long as the monthly prices are not entered into the monthly demand zone. How do we know they are not entered? Because they are not entered, the price direction is showing towards the supply zone to demand zone. Supply zones to demand zone indicates the prices are not entered into the monthly demand zone. Currently, they are moving from supply to demand zone. That's why I am selecting price direction. In which time frame we have to select? Monthly time frame. Because instead of curve, we are focusing on the direction. So monthly supply zone to demand zone price direction. SZ supply zone, DZ demand zone. So the arrow mark indicates the prices are moving from supply zone to demand zone. So that is what you should understand. Okay, weekly, but there is a hurdle. What is the hurdle? Weekly. That we will see. First we will filter and then we will introduce. We will remove the hurdle. Currently we have a weekly hurdle is there. That we will remove in the next filter. So first let us generate the report. So total 7 stocks are filtered. And these 7 stocks, weekly hurdle might be there. What is weekly hurdle? Weekly demand zone. You are taking trade on weekly or daily supply zone. Just below the daily supply zone, weekly demand zone is there. What happens? The weekly demand zone might push the prices again up and it might stop out your daily demand zone. Because weekly is powerful than daily. So we don't want that hurdle. Now we filtered with that hurdle. We don't know any of these stocks are having that hurdle. So what we do, we will go back and then let us introduce the one more filter. What is the one more filter? The weekly also, the price direction should be from supply zone to demand zone. Now we removed the hurdle. We want only the stocks not having the weekly hurdle. Now see, from 7 stocks, the list is reduced to 3. That means remaining 4 stocks are having the weekly demand zone as a hurdle for our supply zone, because this is a bearish setup. Bearish setup, we take trades in supply zone. We go for short trades. Bullish setup, we go for long trades. Bearish setup, we go for short trades. So we removed the hurdle. The moment you remove the hurdle, 3 stocks are filtered. So this is what you have to understand. So these 3 stocks are bearish, bearish setup stocks. But there is also a possibility that prices might be moving from all-time high to demand zone. So let us find such kind of stocks. So what we do, first we will keep the supply zone to demand zone. Let me check weekly. If weekly is moving from demand zone to all-time high, I mean all-time high to demand zone, all-time high to demand zone. Any stocks are there? No stocks are there. So let me remove weekly hurdle. Let me filter. Are there any price movement from all-time high to demand zone on monthly time frame? No stock. So we need not worry about. So whatever we filtered, that is the final list now. So you may ask a question, why we are not selecting all-time low? All-time low is also there, right? The reason is now none of these stocks in our list because we are selecting stocks listed in futures segment, equity stocks only, but only we are filtering stocks listed in F&O. So none of these stocks are near to the all-time low. So that is the reason why we are not bothering about all-time low in our filters. So this is bullish and bearish setups for daily time frame. So as I promised, what I do, I will also look into the 75 minutes time frame. So entry time frame is 75 minutes. First bullish, not bullish setup. First let us filter stocks near demand and supply zones. After that we will go for the setups. So 75, let us filter the stocks near 75 minutes demand zone. So these three stocks are near 75 minutes demand zone. Let's go back. Entry time frame 75 minutes. Let us filter the stocks based on stocks near 75 minutes supply zone. So these four stocks are near to the 75 minutes supply zone. Okay, now let us generate the stocks based on bullish and a bearish setup. So entry time frame is 75 minutes. First we will start with bullish. So I am selecting the entry zone as a demand zone. Because this is a bullish setup, my trend. Now what is the, for 75 minutes entry time frame, what is HTF? HTF is weekly. ITF is daily. LTF lower time frame is 75 minutes. So for bullish setup, weekly time frame, the trend could be either up or sideways, but daily trend should be uptrend. This is bullish setup. Not only that, even price direction is also important for the bullish direction. They are traveling from weekly demand zone to weekly supply zones. Those stocks only we select. For the stocks traveling from weekly supply zone to weekly demand zone, we don't apply our bullish setup. So that's why price direction. What is the price direction? HTF time frame, you have to apply price direction. What is HTF time frame? Weekly. So now I am selecting demand zone to supply zone. That means prices are traveling from weekly demand zone to weekly supply zone. But in between there is a hurdle, that is a daily time frame might be there. So this hurdle we will introduce in the next step. First we will filter and we will find how many stocks are there. So total 12 stocks are filtered. But out of these 12 stocks, there could be some daily hurdle might be there. That means between 75 minutes demand zone and supply zone, there could be a daily supply zone might be there, which will disturb our long trades. So that's why what we do, let's go back. Let us introduce one more hurdle, one more filter to remove the hurdle. That is, daily also should travel from demand zone to supply zone. So weekly is price is moving from demand zone to supply zone. Daily also price is moving from demand zone to supply zone. Now no more hurdles for 75 minutes time frame. Now out of 12, only 5 are filtered. Now 5 are displaying now. Total 7 stocks are filtered. That means all those 7 stocks are having weekly supply zones as a hurdle that might disturb your trades. So we removed them. Now you can focus on these stocks. But are there any peers to count? Yes. So what we have to do? Let's go to the peers to count and set that peers to count. Which time frame we are setting? Now 75 minutes you have to set, because the zones we are displaying is 75 minute zones. So 0 and 0. Now let us filter. Now 5 stocks. These 5 stocks are peers to count is these demand zones are not having any 0 peers to count. Okay, good. So this is about stocks moving from demand zone to supply zone. But we have one more list also we have to generate. That is all-time high stocks. So what we do? Instead of stocks moving from demand zone to supply zone, they are moving from demand zone to all-time high. First, let us remove the hurdle. How many stocks? It is filtered. Total 31 stocks. But there could be a daily supply zone hurdle might be there. So let's go back. So what we do? Daily demand zone to supply zone price should be traveled. You know, only 2 stocks, but these 2 stocks are having supply zones and traveling towards the supply zone. So this is one valid list, and one more valid list, because the earlier filter might have removed the stocks traveling from demand zone to all-time high. This is also. So you should use, this is also one more list. Now this list is having 25. So this list and previous list both are valid. But remember, this is all our all-time high related stocks at weekly time frame and daily time frame. So this is about the bullish setup related stocks. Now what we do, let us go to the bearish setup. So entry time frame is 75, but the entry zone is supply zone. What about trend? Weekly trend should be, because weekly is our HTF. HTF trend should be either downtrend or sideways. But what about daily trend? It should be a downtrend because it is a bearish setup. And what about the price direction? Price direction should be from supply zone to the demand zone. That means your weekly prices are going down. Then only we have to go for bearish stocks. And what about the daily? That we will see in the next. Now we are removed the hurdles. That means we removed the filter. So that means there is a daily hurdle is there in the filtered list. 13 stocks are there, but there is a daily hurdle. What is the daily hurdle? The daily demand zone is there between your daily supply zone, between your 75 minutes supply zone and 75 minutes demand zone. That's why what we do, we will go back and then we will remove the hurdle. How we remove? The price should be traveled from supply zone to demand zone, where daily also. So weekly price also should go down. Supply zone to demand zone means price should go down. Daily price also should go down. That means from supply zone to demand zone. In both these conditions, then only we take our trades on 75 minute supply zone. Now 7 stocks are filtered. These 7 stocks are not having any hurdle. Look into the filter now. Your entry zone is a supply zone. First of all, your time frame is a 75 minutes time frame. And your entry zone is a supply zone. Your zone violation trend weekly is either demand or down or sideways. Daily is a downtrend. And what about direction? Should be traveling, weekly price should travel from supply zone to demand zone. Daily price also should travel from supply zone to demand zone. And pierced zones we are removing. Pierced count should be 0. So this is our strategy. Search strategy for bearish setup. But these are all the stocks having both demand and supply zones. What about all-time high? So let's check. What is all-time high? From all-time high to demand zones, prices should move. And first we will remove the hurdle and we will check any stocks are there. All-time high to demand zone. There are two stocks are there currently moving from all-time high to. This is at weekly time frame. The weekly time frame, not on 75 minutes time frame. So these two are also valid, but is there any hurdle? Let us check. Let's go back. We have to check two conditions here. One condition is maybe them in weekly they are all-time high stocks, but daily there could be supply zones. So that's why first condition is supply zone to demand zone. No stocks. Let us check all-time high to demand zones. This is second condition. No stocks. That means both the stocks are having a hurdle. Hurdle as a weekly demand zone. So you should be careful about those stocks. So this is the way we can generate bullish and bearish setup related stocks for 75 minutes time frame. Okay, now the next time frame is 15 minutes time frame. So let us generate 15 minutes time frame related stocks. First we will generate stocks near demand and supply zones. Then we will look into bullish and bearish setup related stocks. So let us find the stocks which are near to the which are near to the 15 minutes demand zone. So these three stocks are near to the 15 minutes demand zone. So let's go back. Entry time frame is 15 minutes. Let us find the stocks which are near to the 15 minute supply zone. So these two stocks are near to the 15 minutes supply zone. Okay, this is about 15 minutes stocks near demand and supply zones. Now 15 minutes bullish and bearish setup related stocks, let us filter. So entry time frame is 15 minutes and the zone is a demand zone. That means we are selecting bullish setup related stocks. Okay, for bullish setup, what is the trend? Even before that, for bullish setup for 15 minutes, what is HTF, what is ITF and what is LTF? For 15 minutes, HTF is daily. ITF is 75 minutes. And LTF, that is our entry time frame, is 15 minutes. We already selected entry time frame 15. So for trend, you have to focus both on daily and 75. Because daily is HTF time frame, your trend bullish setup trend should be either uptrend or sideways. Okay. And 75 minutes is the ITF. For ITF, for bullish setup, it must be uptrend. 15 minutes we don't bother any trend. That is entry time frame. So we have selected the trend. Next, what is that? The price, how it is traveling. In bullish setup, always price should travel from HTF demand zone to HTF supply zone. What is our HTF here? Daily. So let's go to the daily. So daily demand zone to daily supply zone. You might be having a hurdle. So before removing the hurdle, let us check for stocks are there, whatever stocks are filtered. So this is the filtered. Total 19 stocks are there, but there could be some pierced zones are there. So what I do, let me go back and set the pierced count to 0. Which time frame we have to set? 15 minutes we have to set because entry time frame is 15. So 15 minutes zone, so the pierced count should be 0, 0. So now again I am generating without removing the hurdle. Remember, this is the filter without removing the hurdle. Only pierce. See, now list is reduced to 16. Now all these demand zones are having not having any pierced zones. Demand zones. Supply might be having pierced zones. Our interest is on the demand zones. Okay, now these 16 stocks, there could be some hurdle. What is the hurdle? 75 minutes supply zone is your hurdle. That means price might be traveling from 75 minutes supply zone to 75 minutes demand zone, which will disturb your 15 minutes demand zone. Your, your prices should go up, prices should not go down at 75 minutes. So for that what we do, price direction, daily we already set demand zone to supply zone. Now 75 minutes also, we will set the price direction from demand zone to supply zone. Let us filter. Now list is 9. All these 9 stocks are not having any hurdle now. That means on daily time frame, prices are moving from demand zone to supply zone. Even 75 minutes also prices are moving from demand zone to supply zone. In between 15 minutes zone is there. So this is what you should understand about bullish setup. But what about all-time high stocks? That will also we will filter. Let's go back. So where is the direction? So your daily direction should be all-time high to, demand zone to all-time high, DZ to all-time high. Okay, initially we will remove the hurdle. Without hurdle, we will check how many stocks are there towards all-time high. That is on daily time frame. We have 22 stocks are there. These are all 15, these are all 15-minute stocks only. But they are all at the all-time high. These are all all-time high stocks. But without the hurdle, they are all with the hurdle. All these stocks are with the hurdle. So let us remove the hurdle. What is that? Two conditions we have to verify. First condition is demand zone to supply zone travel. The second condition, demand zone to all-time high. Let us see, because there could be 75 minutes, there could be stock might be having both demand and supply zones. Daily it is having only demand zone, no supply zones. But 75 minutes there is a possibility. That's why first we will check. 75 minutes there is a possibility, there is no supply zone also. That is also there. That we will check. So we are removing a hurdle with respect to supply zone. So only one stock, Escorts, is there. This stock is having both demand and supply zones at 75 minutes. Of course, 15 also they are having, that is a different story. But 75 minutes, this stock is having both demand and supply zone. So one stock is listed which doesn't have any hurdle. This is not having any hurdle. So you can consider this stock. Next list. Instead of demand zone to supply zone, the price should travel from demand zone to all-time high. Maybe 75 minutes also there are no supply zones. So how many such kind of stocks are there? So these 18 stocks are not having any hurdle. Previously one stock is not having hurdle. Here 18 stocks are not having any hurdle. So you have to consider this list as well as the previous list that doesn't have any. Total 19 stocks. So this is about bullish setup related stocks for 15 minutes time frame. Similarly, let us look into bearish setup for 15 minutes. So entry time frame is 15 minutes. Because this is a bearish setup, your entry zone should be supply zone. Because it is a bearish setup, your trend should be for daily, HTF is daily. So trend should be either down or sideways, and a 75 minutes trend must be a downtrend for bearish setup. And the direction, price direction, because this is a short entry, because for short entry, daily prices should go down. So how do we know they are going down? If the price direction is from supply zone to demand zone. Okay, we should also remove the hurdle, but without removing hurdle, first we will filter and check how many stocks are there. So total 7 stocks are filtered. But how do we know? There could be a hurdle from 75 minutes. 75 minutes demand zone will disturb the 15 minute supply zone. That's why we will check whether we want stocks not having any hurdles. So 75 minutes also, the price should travel from supply zone to demand zone. Now let us filter the stocks. Only one stock is filtered from 7. This stock is not having any hurdle. Similarly, we will check whether there are any all-time high to supply zone traveling from ATH to, not supply zone, demand zone. All-time high to demand zone. First, let us remove the hurdle. One stock Maruti is filtered. So in this stock, the daily is moving from all-time high to demand zone. Okay, but what about the hurdle? Let us check. 75 minutes. There are two possibilities. One is 75 minutes, the stock might be having both demand and supply zones. Second possibility, 75 minutes also the stock is moving from all-time high to demand zone. So we have to validate both. First we will validate, let us assume 75 minutes they are having two zones, demand and supply. So what is our direction you have to check? From supply zone to demand zone. The travel should be supply zone to demand zone. Yes. On 75 minutes, Maruti is having both demand and supply zones. But 75 minutes also, Maruti is traveling from supply zone to demand zone. That means 75 minutes prices are going down. Daily also prices are going down. So it is a perfect bearish setup stock. So this is the way we need to understand different bullish and bearish setups. This is the way NeoStock software is helping to filter the stocks. So before closing, what I do, I will generate demand and supply zones for all the daily time frame for your reference. I'm not generating for 75 and 15 minutes. In case if you need, you can request, I will generate, because mostly daily is the basis for the reference for many people. So let me generate all the supply and demand zones for your reference purpose. So entry time frame is daily. I'm generating all the demand and supply zones for all the stocks without any filter. This is the complete list. I will keep on scrolling this list down. Whichever the stock you want to refer, please pause the video. So this is the complete list. I hope this information is useful to you for your further study and analysis. Let us all meet again in our next video. Thank you.